Morning, everyone. It's Chris from Axel as well as Solstice. You can find us on both websites on X, which used to be Twitter, Instagram, Discord, which you can DM me. At the same time, you can use X. We used a weekly video on YouTube to give an overall view of the stock market. Pay attention to them. Usually, they are good review for the whole coming week and what the outcome going to be, more or less. So we trade the side market, up market, as well as down market. We know our past performance doesn't give us any indication of our future results, and use at your own risk. Let's go to the first slide up here. And what I put the S&P 500 here. And what I did with it, which is the E-mini micro, showed the April call at the 51.45. And we eventually broke out and we came back to where the dump was in the tariff news from Trump, and we rallied back up, but we grinded in June, and we pushed a little higher, and eventually now we're starting to run away to the linear regression uptrend channel here, which we are touching. If we look above and fail, or are we going to get continuation or not? And I put these two ovals for reaching the upper level of the linear regression. I put this lower area because of this consolidation here, because it has a lot of volume. When we grind it up in the prior year in 2024, you can see that retesting this area. We tested it in January, rallied up in February. We had the dump, then we rallied, then we came up in March and came back down in April. Then we moved back up, and eventually now we are in July. We have done that 25% dump. We have about 32% up increase in the market. We have cleared, the December and the January, February highs here, which is around the 61.75. I am paying attention to this number because we are running away from the 50 simple moving average and the 18. You can see we are in the upper trend. There can be continuation to 6,600, or we can reverse back into around the 62.23 and 61.75. So I'm paying attention to the tariff, because the most important thing, and I put on this slide, is the stock market underestimating the August 1st tariff news. As well, we have the Fed rate cuts as well as inflation we got to talk about. Usually when there is divergence, you can see when we were going sideways, the RSI was getting weaker. That was diverging, and eventually we broke up from that channel, continuing higher. If I connect these points, these lower highs up here, we are still in an uptrend. I am not saying we can come back in, but pay attention to them. We are getting to an extreme on the daily and the weekly charts. So let's go to the next slide that I have up here. And what I wanted to do is show you is here the earning whisper from Earning Whisper Direct. On Monday, we have a couple of different companies that are reporting, some of the major ones, you've heard of Raytheon, Whirlpool, Rhombus, Waste Management, and you can go through them one by one, the ones you like and the ones you don't like. I usually try not to trade on weekly, announcement of earnings. I've learned my lesson before. You get a lot of money and sometimes you end up losing if you're on the wrong side of the earning report. So we have on Tuesday Visa, SoFi, PayPal, Boeing, Starbucks, Booking, it's very important, Cheesecake Factory. Then here we have Meta, Microsoft, Robinhood, some of the major players, Ford, Qualcomm, and so on. So, and the next day we have healthcare, CVS. I did not mention United Healthcare here. You can see CVS here in United Healthcare, and you got Cigna here on Thursday, as well as CVS. You got Amazon, major player, Microsoft and Meta on Wednesday, and Apple and Amazon on Tuesday, and Coinbase. You got Reddit, Roku, and so on. And on Friday, we heavily in the oil sector, Exxon, Chevron, and so on. So pay attention to these levels so we don't end up getting caught on the wrong side. We're going to trade what we see. And I forgot to mention, Hershey's, chocolate, girls like chocolate. I do like dark chocolate. And, you got Harley Davidson. Some guys like motorbikes. So let's go to the next slide. And what I wanted to tell you is, remember, you can check us out at Solstice, get in contact with us, give us your commentary, let us know what you think. And the most important, trade what you see on the charts, not what you think. The first slide I have up here, I put Axel. You can check us out on the website. And I put Solstice and the member services and what we provide and what we not, as well as on Solstice we provide on daily basis on Discord channel, which is a live trading platform for educational use and teaching you how to use technicals in order to trade correctly. So we use the adaptive algorithm that's built by us. So remember, you can check us out at these websites. Let's go to the first slide that I have up here, and I left the S&P 500 here. What I wanted to do is go from the daily, and I wanted to go to a time frame. We're going to go daily here. I'm going to use a 10-year, and what I'm going to do is go to a monthly chart. We can use the SPX after this, and what I'm going to do is show you on the E-mini or SPX. You can see, since we had the runaway train, which I mentioned here, that big candle here from the tariff, we had three soldiers going up, and we have reached that linear regression uptrend channel from the 22 highs and the 2023 reset. The 24 was the rally back to the highs in December, broke even. Then in January we tested that area and ran up to. In December we fell down back in April, and you can see that uptrend channel. We tested it almost identical to that 2022 highs in the December, and we reversed back up, and we got these three soldiers. Are we getting exhausted? Remember, we are in an open cone. That linear regression uptrend channel can continue higher. I'm not saying that we cannot keep going higher, but I am paying attention to that 18 SMA as well as the 5 simple moving average on the monthly. The RSI is at an extreme on the SPX. If I do this on an SP, if I do this on SPX, I want to show you something on SPX. This is SPX, I believe. You can see I have the annual chart, the retest. If I take the highs and lows here, we duplicated the extensions to the upside. But what I want to do is go to the daily chart. I wanted to show you that these monthly charts are going higher. But what I'm going to do, instead of monthly, I'm going to go to a daily chart, move it to the right side to show you these levels as well as the weekly. We do have these gaps up here. But coming back to this area where the February highs were, this was the March lows, March highs, then the April lows, then the rally. I did not mark the June and July here yet. I just left them. I just showed the gaps. And what I want to do is zoom in here after the March highs. I want to show you that this gap and this two gaps are major ones, but we've been going up on an incline. And here we consolidated for about a week. We retested the backside of the 18 simple moving average on the daily, rallied up, and we are still in a grind runaway train with no stop. The 123% fib from the annual chart is around the 64, 34, 50. Is there going to be more continuation to the upside? Possibly. But what I wanted to make sure is that people understand that these levels, and you know how we had this, I'm going to activate it. I'm going to show you activate it. I'm going to show you how far we went up in here and what the percentage rate of return is on the chart so far. You can see it's 32. If I can do the measurement using, that channel here or that line, I can point it from point A to point B, and it'll give me the total return on any point from lows to highs or highs to low. If I want to measure the distances going back down, that was a 6.5 retracement back up. But if I do it, from here on, if I just use, from this gap here where we gapped up, where I can take this low here to this high, we already have done 10.75% in the overall market. Is there a possibility of a retracement? If I'm going to do this from this high here, and we end up, coming back to a negative level, that 6100, or to this gap here where this oval is, you can see it. I want to just show it to you guys here this way. So we can see that there can be a 4.45% drop. But the second gap down here is in the middle, and that's a 5.5%. And the bottom one here, which is a small, tiny one, that's an 8.67%. Can we still continue to the upside and go the opposite direction going up? Yes. We can get to 6,700, even if I put it at 6,700 more or less. You can see we got a 5%, 4.75, 5% return going up that way. But in case we do drop to a 5% drop, I'm paying attention to that 61.75 in the overall market, in that small gap in the S&P 500. So let's go now, take a look at the Mega 8. What I want to do is here show you the NASDAQ 100, but this is just showing you Apple, Amazon, Meta, Microsoft, Google, Tesla, nvda, and Netflix included. The reason why I wanted to show this, as you can see, when we had the December highs, we consolidated here in March, February. When we fell down, we had an inverted head and shoulder. This is the shoulder, this is the head of it. It didn't kind of form a shoulder, and we rallied and we grinded here for a while at this high level on the combination of those 8 stocks, grinded higher, pushed up. Then we coming back here. There's a lot of consolidation in the tech sector, so I'm paying attention to SMH. I'm going to show you what it is. So we're going to uncheck it. We're going to go to the semiconductor SMH, and I wanted to show the semiconductor that it is starting here to get a little bit tired and exhausted of that last week's range. We can see there's going to be maybe rotation. We had double top here, and we grinded back to the 18 simple moving average. And if the 18 and the 5 crosses and the 18 ends up on top between the highs and lows, I'm looking for the midpoint of it, which is around the 274, 275 area in the semiconductor if it finds support. If not, we'll look for the 50 simple moving average. Let's take a look at the XLK in the tech sector. XL, and we can see in the XLK that the tech sector is still running hot, and we can see that since we grinded here for a while, we were at the peaks of the high, and we can see that we pushed up. We have this gap, we grinded up, consolidated, grinded up, consolidated. Now we're in this 8-9 day range, and we have this 8-9 day range. If eventually I can't continue higher and we fall through, I'll look for the back of the consolidation in this area at 241. That's in XLK. Now uh, uh, aapl, I want to take Apple by itself. And the reason why I wanted to show Apple here, there may be an opportunity in the future in Apple to purchase Apple. It's been range bound between the 205 and the 215. If it's going to break up, it's going to have to fill that gap on the right side, which I'm going to zoom in just to this area here. I have it marked here. You can see that we did not fill 100% of this gap because we got to 216, fell in. Here we tried to go up, but here it's in range. If it doesn't clear and that virgin control point, I put that purple line here. I haven't put the other ones down. If we end up falling, I'm looking for the backside of this channel and the 50 SMA. If I end up breaking up, I'm looking for the upside and clearing that gap here in the future in Apple. And I want to put NVDA here on the weekly chart, NVDA. Let's just do it correct. And I'll mention AMD, which I think is a better play in AMD than NVDA because it's overextended around the 175. I'm going to use a 10-year. What I'm going to go is do the weekly chart and show you something here on the weekly chart. If I just zoom in here on the charts, you can see that this consolidation where we had that reset to that around the I was looking for the 95. We had this double bottom in this area, rallied back up. We fell in, grinded. We created some kind of a W, double topped here, fell back into the same area here of consolidation. There's a small gap here. I have marked it. I left it there, and we grinded up. You can see that I did that zigzag pattern. These are actually, those ovals are Fibonacci's, and we can see from the exosphere, we double deviated to the top and we reached that extension, the 161. We are in an uptrend. We are testing above that 175. If I end up losing this area, I'm looking for the backside of the 152 in NVDA eventually, because you can see the 5 and 18 are starting to get overextended. If I take the highs and lows for the year for 2025, this is the lows, this is the highs of it. And if I do the extension, I mean, we are away from that support area, which is around the 152, 153. So I am paying attention to that one as well. Let's take a look at the AMD, and we'll go back on AMD for a shorter period of time. I'm going to go from a weekly to a daily chart. And what I wanted to show you here, that AMD is starting to push higher, but there are gaps in between. There's one gap here, There's another gap, small one here, and there's another gap here. And this retesting of that 147 is great. Now it's trying to get to that double top. If it looks up and fails, I'll look coming back to this area and around the 147 for continuation in AMD, because I think AMD has more value than NVDA because it's a little bit overextended. I'm not saying to jump in today, but pay attention to it. Take a look at overall bond market, IEF or IEI. We can do either one. That's the 3 to 7 year. We can see that the bond market has been range bound in the prior year from all year round, hasn't been able to go up, hasn't been able to go down because Jay Powell has not decided to decrease interest rates. If there is, we can see if the par value of the rates go lower, the par value of the bond goes higher. So we have to pay attention to that short term maturity in the bonds, or you can use like ZN or ZF. ZF is the 5 year, the short term loan. You can see it's the same setup as well as the ZN. So these two, you can look at them. But what I wanted to do as well, show you the VIX on a quick note to show you that the VIX have been, every time we had a push higher, we came back in. We pushed higher, we came back in. And in this range here, if I zoom in this area, you can see every peak we have a valley, every peak we had a valley. We consolidated around the 15, but this time we fell a little further out. If you're looking to buy insurance around the $10, $12 range, if there's going to be continuation or not, we are paying attention to the tariff. Pay attention to the VIX in case we get a spike up and a reverse in the overall market to the downtrend. So in the sectors in the S&P, we can take a look at the XLF, the financial. Oops, XLF. That's the financial. You can see it's at a new high. So pay attention to that. The XLP consumer products. We can see it's being range bound. And I want to look at one other one, which is that we did the XLK, which is the XL U. I think XLU is the utilities, XLV is the healthcare sector, and I'm paying attention to the healthcare. The reason why I want to show you the healthcare, because I think there's going to be an opportunity in the biotechs in case we end up breaking these three areas, the 140, 137, let's call it 75 and above, and we continue. We have a target of 142 in this gap in this area between this candle or this candle and this one here. There's a nice gap around the 142 area in case the healthcare starts to move back up. And I am paying attention to the RSI. Once it found support around the 40%, we cleared the 50, going towards the 60 and eventually the 75 in the RSI. Let's micro NQ. Now we'll do the measured move on the micro NASDAQ 100. You can see on the daily chart, it has been a grind up, runaway train from this area after the consolidation of the December, the February highs, and the July consolidation and the breakout. We grinded here for a week. Now we're pushing up. But there's a little bit of exhaustion in case we get up here and we get exhaustion. Look for the backside of the 50 SMA and the breakout from this area here. So let's do the measured move daily. We're going to go to an intraday chart. We're going to go 20 days. 20 days, we're going to use either 4 or 6 hours. It doesn't matter. I know I'm going to have that cloud there. The overnight is the gray area between the European Asia market. The US market is the black area. I do show the overnight action. So the highs for the week is here. The lows for the week is here from Sunday through Friday. So I'm going to go get a measuring tool. We take the peak of this high, peak of this low. And if I want to extend it to the left and look at where the measured move, edit the property, I can go back like this by day or, type it in. I just left it to show you where the 7-1 is. And if I zoom it back, we can see where the consolidation was here. The breakout will come back in and rally up during those short week holidays. Then we continued higher, but this week has been a little bit more tighter. I think the tariff and inflation is going to cause an effect in the market. one way or the other. I think, this is from Ben Lichtenstein. He says, well, it's going to go one way or the other. I do not use that. I use the RSI or the stochastic or the MACD in relationship to a Fibonacci or measured move. How far are we from the 18 SMA as well as the 50 simple moving average in relationship to the weekly, daily, monthly, and so on. So we're going to trade what we see, not what we think. This is on the NASDAQ 100, and I will do one for every the measured move on SPY. We can see on the daily chart that the SPY has peaked on that linear regression. So I can take this high here, measure it to the downside, which was, this is Friday, this here, the prior week. So it's going to go to Sunday. I edit the property, and what I'll go back in history the same way that I did on the other one, and I'll show you the daily chart, how it looks like. We'll go back to the 28. 25, make it 25. And we're going to do this on the daily chart on the S&P 500. The reason why I wanted to show this, because if you see the extensions going to the upside, that's where we can reach. The extensions to the downside where we can reach, and you can see the breakout in this area. So if I get an oval or a box and I connect this high to this area, coming back to this area here, you can see where that level is of consolidation, those three peaks, the valley, the breakout of it coming back to here. That means it's going to put me on the charts between minus 80 and minus 100% from the zero line. But this consolidation in the prior 10, 12 days that we had here and the retest here, that's the zero line. You have to pay attention to that 626 on the S&P. If there's going to be continuation, we look for the upside. If there's going to be continuation back to the downside, I look at the 18 and the 50, and the midpoint of it would be in this area. So what I'm going to do, remove this drawing. And what I'm going to do, put an oval for everyone there as a marker between this area and this area so everyone can see this. This is where the area it's going to go down to in case we fall. And the upside would be the area from here to this area here to the upside if there's going to be continuation. I wanted to leave this on the chart still the following week. We'll just leave the ovals there. I'll get rid of the measured move. So I hope this video was very helpful. If you have questions and you want to come up to reach to us, please let us know. Once again, and here is the website that you can reach us at Solstice ATR or Axel. I hope this video was helpful. Take care. Over and